Hello viewers, today I am going to talk about stock market manipulation. Stock market manipulation is a very trending topic. Why do stock prices go up and go down beyond a certain limit without any information being provided or obtained from the market? The reason is very simple. Big analysts have a big power of money and hence they have the power to make the stock market jump up or down at their whims and fancies. An ordinary trader or a person in the market would not have the information or would not have the information that the stock prices will increase or decrease to a certain level because it has been manipulated by the big investors. For example, a group of investors had a meeting, had a discussion, and they agreed that this is the particular stock, say Balrampur Chini, that we are going to buy. There was no news that ethanol prices have increased or sugar demand has increased, that or maybe the company has given good quarterly results, that the stock prices will increase. But on a certain day, we saw a huge increase in Balrampur Chini. We went and we bought that share as an ordinary investor. Suppose I bought 100 shares, someone bought 200 shares. The very next day or in a couple of days, we had a heavy selling, maybe 8%, 10% selling from what price we had bought, and we incurred a heavy loss. Now, this contradicts the theory of efficient market hypothesis, which states that all the information is available to everyone. Insider trading, unnecessary selling and buying pressure, these are all parts of stock market manipulation. For example, there was a particular day when the Monetary Policy Committee, the MPC, got together and they decided that the repo rate will remain unchanged. Repo rate is the rate at which RBI gives loans to banks. This was a positive news for the banking sector, that at least the repo rate has not increased. But we saw there was a huge selling pressure. The stock market, maybe the bank nifty just shot up 100 points and then there were 400 points selling from that range. It doesn't mean anything. It only means that there was manipulation. There was a group of investors who were maybe expecting a more positive news, and there was a group of investors who were more interested in shorting the share market from that value because they just went with the wind and they just agreed that we are going to short it from that point. An ordinary man or an ordinary trader could have incurred a huge stop loss, could have incurred a huge loss had he not put a stop loss. So in a nutshell, stock price manipulation means that stock price are artificially increased or decreased beyond a certain level which is not supported by logic. I will give you an example, and the best example period is the lockdown period. Specifically from 23rd March 2020, we saw a huge increase in stock prices which was not supported by the market. It was only because many businesses were closing down during that period and many people were artificially inflating the share market. And I will substantiate my point with a specific stock which you all know, and that is our very favorite RIL, Reliance Industries Limited. Okay, so Reliance Industries Limited. Stock price increased from rupees 900 on 23rd March 2020 and at 23rd August 2020, in a span of 5 months, the stock price increased to 2150 at a period when Corona was at its peak. It came down and presently on 17th February 2022, it is trading at rupees 2442. Now, here comes the game. When you don't have any great news of, for example, no great news of quarterly results, no great news that the company has won a great deal, no great announcements by the management of the company or the promoters of the company, Promoters are those people who own the company. For example, Ratan Tata is the promoter of the Tata Group. Mr. Ambani, Mukesh Ambani is the promoter of RIL, the major stakeholder who started the company, made a shareholder of the company, you can say. So, in spite of no great news, the stock prices increased, and this is a manipulation. Now, manipulations can be of two types: manipulation 1 and manipulation 2. Number 1, manipulation, we call this pump and dump. This is done by the promoters of the company. Promoters are involved. What do we do here? Well, we buy or we increase the share price. As demand increases, the number of people become more interested to buy the share, and the stock price increases. How do the demand increase? Demand increase when the promoters give incentives or tell the brokerage companies to highlight there and give suggestions to their clients to that buy the particular share. For example, buy Tata Motors, buy RIL, when there is no particular incentive or no particular information of that industry. They inflate the market artificially, or they may dump it. So, for example, I will tell you, this is done majorly by the small cap companies, majorly by the promoters. So, for example, you get an information that buy Ramki Infra. There was no particular announcement, say, for example, in the infrastructure sector in a year back. Before the budget, there was no. But you saw Ramki Infra, every day it was hitting the 5% circuit. It was increasing like this. Now, you thought that it is a good price to buy. You brought it at rupees 50, say. Now, the stock price became 37 or 36. Whom do you blame for this loss? You cannot blame anyone, because there was no information asymmetry. Only because your broker told you to buy it, you just bought it. So this is one type of manipulation, and this is what we actually call the bull cartel. Bull cartel, because here the promoters are involved, small companies do it. Now, what do the large companies, large caps, for example, Tata Motors, Reliance, their promoters, what do they do? There is something called the bear cartel. So, as we know, our famous Mr. Manu Manek, in the Harshad Mehta scam, Manu Manek used to short. So, shorting is basically a technical term. It means that you sell off your shares at a high value and then you buy them at a lower range. For example, when you do excess of selling without any information, then what you actually do, you make the market fall from a range and you give a fear to the investors. People run away from the market. They say that we are going to sell our stocks and we are going to liquidate our positions, book our profits, let our stop losses be 10%. Even loss booking will do, because we will protect ourselves from a huge loss. But the problem here is that as soon as you exit, the very next day you see the share prices increasing, and they increasing to a huge extent, and then you sit and say that maybe I could have invested and I could have earned money. To protect yourself from these manipulations, there are some steps that you may follow. Number 1, only do buy shares of good companies. Companies you know, companies with good fundamentals, companies which have good quarterly results or news. Do buy the shares of these particular stocks. Number 2, put your stop loss. Stop loss is a very important thing. For example, if I invest say 10,000 rupees, I can lose maximum rupees 1,000 to 1,500, not more than this, So if my stock price dips 15%, I put my stop loss trigger at that, so I lose maximum 1,500. This is my loss that I incur. This is very important, because even if manipulations occur, you have taken a decision based on your funda, based on your research report, based on some relevant logic, but it did not work. So you book it at a loss, and then you look at some other industry, some other company, some other stock. Now, you can also, so this is number 2, buy the shares of good companies, put a strict stop loss. Number 3, do ignore irrelevant information. For example, your broker told that buy Jubilant Foods, buy Vate Wabag, buy Balrampur Chini because ethanol prices are decreasing, or maybe buy Tata Motors because we are having a shift towards electric vehicles. Only on the basis of this information or only on the basis of some random recommendation, do not buy stocks. Buy stocks only when you see good quarterly results, good ratios, good information available in the market, and also buy it by seeing both the technical and fundamental charts. So these are the some of the places where you should know how to protect your capital from manipulations. And of course, do know that companies which are large caps have less chances, because SEBI monitors these companies, they have less chances of manipulation. So you can give your bet for Reliance, TCS, Infosys, or maybe you can also go for something like Britannia. Definitely some info on the industry and company is required before you invest. Also, the global market scenario may matter when you invest. If you guys have liked my video, please do share, like and comment, and also do give me valuable suggestions on what I can do to improve my videos. Thank you.